Eric Muathe with Muathe.com. After the close of December 27th, 2016, let's take a look at SGEN. Now the stock had a huge drop, as we can see here, as of Monday, Tuesday actually, after the holidays, and we can see that, so this big drop was the beginning action for the week. Monday was a holiday, and we can see a 15% drop. And usually whenever I see a stock drop just out of nowhere, I try and figure out what happened, because the last thing really anybody wants to do is own a stock that just collapses. So I always try and figure out what, if any, what the red flags, because the last thing you want to do is be blindsided by a stock's movement. Now one thing we can see here is the previous support line, and this is on the daily, but I'll show you why I think the stock was giving a red flag. But you have to go back to the entry here of the lows, and I call it entry, but it's actually like this RSI breakout on hindsight brought the stock off the lows there. We've never been back to those levels. Stocks traded higher over the past year, so we draw a line from there. We're talking about this RSI line here, this sentiment line right there, and you can see that over the last year or so, stocks been coming back here. You can see double bottom support below the line, back above it. It doesn't get any more clear than uniform action there for the lows there. Here you have uniform activity. You went below that line, back below it for the lows here, and ultimately here you tag the same line here for the lows there. Double bottom support again for the lows there. But what we are seeing now is a change, because we are cracking below that line of support as of today. We are also moving below RSI 30.9. Another reason why the stock could have had this huge relative big down day as compared to previous action over the last year. So a lot of reasons why you can say the stock is dropping here, gap down below the 50-day moving average. But let me share with you why I think the stock was struggling to keep these highs here, because this is where I think there was a red flag around here in the lower 70s. And let me share that with you. You have to go to the long-term monthly to avoid being blindsided by the current move. And what we have to do here is take a look at the previous support line. So this line going back to 05, touching the lows of 06 and the lows of early 09. So let's just keep that line right there, and you can see once the line was established here, it's been good support since for the re-entry there on the monthly, support on this line for the re-entry here, and we came close here for the re-entry there. All those re-entries were successful, but take a look at what has happened since the break below that blue line. As you can see, broke below here off the highs there. We come recently, we hit that level with uniform action and were rejected for the highs there. And now if we extend the same line, should be something like that. Take a look at the recent action month to month. We went above the line and back below it for the highs there, which is the highs here in the, let's call it higher 60s and lower 70s. So I think this is the main line here that is causing a problem for this instrument, and the reason it's been unable to hold on to gains above this range here, and why it is now turning down. Now if I draw the same line with a little bit of an adjustment, just a little bit tiny adjustment here, maybe that gives a better picture, and I'll draw it like that, a little bit of an adjustment, and you can see once we tagged that and were rejected. So let me draw that again, just one more time. It's the same line, just a little bit of a variance like that, and you can see that we came back to that blue line recently, and obviously this has been a rejection area month to month. Could be the reason why the stock is struggling. Let me show you another line which goes back to, let's figure out where the trend broke. Just follow this line connecting the lows. Once we broke down here sometime in early 2014 off the highs there, we draw a line from here, and you can see in the current market we've come back. We've tagged that sentiment level again with uniform action, and that's the key. The uniform action means something to the market for some reason, and clearly we are starting to see the stock starting to reverse and respect the resistance here. Now couple that with the previous line we drew, the backtest line, and all of them did point to resistance. And that's why I'm saying it does make a lot of sense to make sure you don't get blindsided by some of these stocks. You have to consider the big time frame, because sometimes the big time frame could be where things are showing more clarity and could actually help you to avoid sudden drops in any stock. So make sure if you are owning any instrument, at least make sure you account for what is going on long-term time frame, especially on the monthly. And to conclude, given the monthly chart here and the rejection we are seeing, it is clear to assume that with the rejection here, chances are that this stock is now under the threat of lower to sideways action, unless it can clear the two resistance levels here. More than likely, in my opinion and estimation, one has to assume that the next meaningful direction for the instrument month to month still continues to be down. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ACS. Woo!